So there's a crazy idea floating around the internet right now that MicroStrategy, basically a once defunct software company turned self-proclaimed Bitcoin treasury, has found some sort of infinite money glitch.
MicroStrategy.
MicroStrategy situation
Is back at it again.
Move over, Elon Musk, because nobody right now is rattling the cages of traditional Wall Street more than Michael Saylor.
And just like the other infinite money glitch that floated around the internet earlier this year, you know, the one where people thought they could make money by depositing fake checks into Chase ATMs, well, I hate to break it to you, but MicroStrategy's infinite money glitch is also not real. And where the Chase infinite money glitch was easier to spot as outright fraud, the MicroStrategy infinite money glitch is more pernicious because they're using sophisticated high finance terms and instruments, which makes it all the more dangerous. And the last time we saw this level of irrational exuberance around new and sophisticated financial vehicles, well, we know how that turned out.
The economic crisis we face is unlike any we've seen in our life.
This is the most significant financial crisis in the post-war
Nearly
period.
250,000 homeowners are in danger of losing their homes.
It's definitely a very, very difficult time, and it's not going to get better quickly.
Let's talk about why MicroStrategy's infinite money glitch and their plan to become the world's first and largest Bitcoin treasury is extremely dangerous, and how it rhymes with the past. Now, before I get swarmed by the Bitcoin hive, I just want to say that I am not anti-Bitcoin. I actually bought a good bit of Bitcoin starting all the way back in 2017. At the time, I developed my thesis that Bitcoin could be used as a means of exchange and a store of value. But as I started really nerding out about the theory of money, I realized that it lacks something called par price settlement. So Bitcoin couldn't be used as a means of exchange. So my thesis changed to it just being a store of value, which honestly has proven mostly true so far. This caused me to sell most of my Bitcoin. But that's what intelligent investors do. When your investment thesis changes, you reevaluate your position. The absolute worst reason to buy any sort of investment is because you just think that sucker's going up. You must be familiar and have an understanding of the underlying asset before you buy anything in the market. Speaking of intelligent investing, if you like this type of content, please consider giving us a like and subscribe. We're on a mission to bring intelligent investing into the mainstream, and your like and subscribe will help us get this out to more people. We really do appreciate it. Anyway, I don't regret my action of selling most of my Bitcoin back then. Obviously, I wish I would have held it. Who wouldn't? But here's Buffett on missing opportunities. In this context, he's talking about missing Google.
What do? You kick yourself? What does
No,
Warren
I don't.
Buffett do?
Because I made so many mistakes. You know, if I tried to kick myself, my legs would be exhausted. I mean, you don't kick yourself in the investment, and incidentally, you don't kick yourself when you make a mistake. I mean, it is part of what you do.
Intelligent investing is all about humility and not being too bold in trying to make predictions. And this is where Michael Saylor and other Bitcoin maximalists go off the fucking rails. There are 3 major reasons, and I'll poke holes in it later on in the script. First, their absolute certainty that Bitcoin can and will only go up. I fully acknowledge this could happen, but the difference between me and other maximalists is that they are certain that it will go up. To them, it's borderline heresy to say that Bitcoin won't determinately go up in the long term. Second, Michael Saylor believes that a high leverage position in Bitcoin is a feature, not a bug. And third, Saylor has a belief that because of the volatility of Bitcoin prices, that's a great thing for MicroStrategy. When you mix volatility with leverage, that's not a good thing. It's like mixing sodium with water. Now, I'll shoot holes in all 3 of these most closely held beliefs, but first, let's talk about this infinite money glitch. Well, a few weeks ago, MicroStrategy issued convertible bonds with 0% interest. That might be taking you back to economics class, so let's cover what that means. To start, let's ignore the convertible part first. When a company wants to raise capital, which capital is just a douchey way to say money, it has 2 major options. It can either sell ownership in the business, known as equity, or it can borrow money by issuing debt. To make these forms of capital accessible to investors, companies will securitize them. Securitization is simply the process of turning debt or equity into tradable instruments by chopping them up into smaller but equal units. When equity is securitized, we get a stock. And when debt is securitized, we get a bond. So MicroStrategy is asking investors to buy their debt, bonds, at 0% interest. why on earth would anyone take that offer? I mean, any business has a chance of defaulting, so you never get paid back on the loan. So you always want some interest rate, and how high that interest rate will depend on how risky the underlying asset is. So why on earth would anyone take this offer? I mean, the US government has securitized debt that they've issued, and that's called a T-bill. And right now it pays around 5% in interest. And there's really nothing much safer than the US federal government. It has an army and a navy and an air force to make sure that it will pay its bills. In fact, the T-bill is often referred to as the risk-free rate in investing. So again, why would anyone take debt with 0% interest? Well, that's where the convertible part comes in. Convertible bonds are bonds that can be converted into stock. It's actually a really cool financial instrument, and it creates a bit of a third option for investors instead of having to just choose equity or debt. They can start with debt, which in the hierarchy of who gets paid out first in bankruptcy court, debt holders, specifically senior debt, which is what is called out here, gets paid out close to the top, and shareholders basically get paid out last. So, according to MicroStrategy's most recent press release, right now they are issuing $3 billion of debt at 0% interest rate in convertible bonds. And they have a plan to release a lot more debt in the future, as we'll shortly cover. Now, if you chose to buy this convertible debt, you can't because it's only open to institutional investors for legal reasons, because this is kind of crazy. But if you were an institutional investor and gave, say, $100 million to buy these convertible notes, MicroStrategy would hold them until December 2029 and then pay you back in full. Again, not a great deal. That is, unless certain terms and conditions are met to convert that debt into equity. And that certain terms and conditions is if the stock price rises to $672.40 per share, roughly 55% higher than the stock was trading at the time of this note. But because MicroStrategy is building up a treasury of Bitcoin, they basically are just becoming a proxy for the price of Bitcoin. And if the price of Bitcoin doesn't just constantly go up over the long run, this could end really, really badly, as we'll talk about at the end of this video. So with that, let's shoot holes in each one of Saylor's deeply held beliefs. First, his absolute certainty that Bitcoin is going up forever. This was Michael Saylor's response when a crypto journalist, Laura Shin, asked him a very fair question about the long-term price of Bitcoin.
You know, you're speaking like a crypto trader right now, right? Yeah, I mean, maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset. The point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right.
Going up forever is a bold, bold claim. The opening scene of the movie The Big Short, which covered the greatest financial disaster of modern times, was a quote from Mark Twain. That quote was, "It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so." There is no guarantee that the price of Bitcoin will go up infinitely. Absolutely none. Zero. Zilch. And I know that for a whole host of reasons that I won't even get into in this video. But even Michael Saylor admits this. Here he is during a podcast interview.
How do you know it's not working? Well, if someone came along and launched something that was more popular with intelligent people, then I guess it wouldn't be working. But of course, Bitcoin's been growing first 200% a year, then 100% a year. Right now, it's still growing 40 to 50% a year. So it's a monetary virus.
And this is only a failure from a technological approach. There are a bunch of other ways that it could fail. Buffett says that the number one rule in investing is to not lose money. And the number two rule is to not forget rule number one. As a Buffett-style investor, we always focus on the downsides. And when we're evaluating an investment, we focus on moats, basically a competitive advantage. And really, the biggest moat that Bitcoin has going for it right now is a network moat, which means a system gets better as more people use it. Think Facebook would suck if no one was on it, right? Well, Facebook does kind of suck, but you get the point. And Saylor's strategy is entirely dependent on Bitcoin going up and only up, with no chances of failure. This is exactly what Wall Street thought about real estate prices right before the great financial crisis. But I'm getting ahead of myself. We'll get there soon. All right, second poorly held belief by Saylor that is just simply not true is that high leverage is a feature, not a bug in MicroStrategy. I'll stick with the facts here. There are plenty of clips about him talking about how it's really great to be levered. But let's follow the money instead. MicroStrategy recently announced what they're calling their 21-21 plan. Yeah, that's right. That $3 billion we referenced earlier in convertible debt, that's just the beginning. The overall plan is to sell $21 billion in additional stock and $21 billion in selling additional debt. Now, that makes it really complex to try to model out, so let's just focus on the debt part. If we go to Flank, we can see that MicroStrategy currently has total equity, which is equal to assets minus debt, of $2.16 billion. If they raise another $21 billion in debt, they will have a debt to equity ratio greater than 10. This debt to equity ratio is also called a leverage ratio. For a software company, this is insanely huge. Like, I normally stay away from anything over 2 unless they have a really good reason for having that much debt. Remember, even though MicroStrategy is calling itself a Bitcoin treasury, they are not a financial institution and do not have the same safety checks, protections, and regulations that a bank would have. So we should still model this as a software company. This is really dangerous because when you use leverage, you can make money really quick, but the inverse is also very true. You can lose money very quickly. Warren Buffett has a famous quote where he says, "Only when the tide goes out do you discover who's been swimming naked." Again, this is eerily reminiscent of another time, but not there yet. Now, what MicroStrategy did do is pretty interesting because these notes are convertible, right? So if MicroStrategy defaults, they would only go bankrupt, right? Well, hold on, because there could be a lot of downstream effects because they're holding so much Bitcoin. It'll only further bring down the price of Bitcoin, which creates the opposite of a virtuous cycle. But hold on, the problem could get a lot worse. Because MicroStrategy is a public company, Wall Street and other investors can use derivatives on them. You can trade options, futures, etc. It's really harder to do that with a currency like Bitcoin, claims to be. So there could be huge derivative implications on this if MicroStrategy starts to fall. Kind of depends on how many people take the bet. It's good that they're only opening it up to institutional investors, I'll be honest. But the third possible problem of this is they're trying to convince other big tech companies to switch their treasuries to Bitcoin. In this article, Michael Saylor is trying to convince Microsoft to do it. And thirdly, and it really does feed on the second one, Michael Saylor acknowledges that Bitcoin is extremely volatile, but he sees this as a good thing. I've watched a ton of interviews on Saylor to make sure I was prepared to write this script, and he often compares volatility to fire. Here he is in a recent Prof G Markets podcast.
What if volatility is like fire. I'm starting a fire, I'm burning the fire for a long time. And so the point is, let's come back to fire. Volatility is fire. If you're a normie, you run away from fire. If you're Henry Ford, you put the fire into an engine, you put it in a horseless carriage, and you create an automobile, and now people can go. And then you put it into a plane and a train.
That's good.
So engineers are putting you're a nuclear reactor in the spaceship. It's scary. In the submarine. But Bitcoin is like the financial fuel. These things are crypto reactors. It's a technically better way to do this, and it's the volatility that's actually the motor that's driving the portfolio or the treasury forward.
Now, this is kind of a sexy and cool analogy. Don't get me wrong, I'm kind of perched my ears. I'm a little bit of a geek. I think Henry Ford was cool. Cars are cool. But when he said the nuclear thing, it kind of made me think differently. Because here's the thing. I've literally been in charge of a nuclear reactor on a submarine before. And I can tell you with dead certainty that we view our reactors as volatile. And we have introduced safeguards upon safeguards upon safeguards to make sure that volatility does not cause catastrophe. And that made me think the same analogy applies for your internal combustion engine. If there was any appreciable % chance that your car's engine would explode when you put it in drive, well, you wouldn't drive, right? And you cannot ignore the fact when you have leverage and you have a highly volatile asset that there is a good probability, it's not 100%, it's definitely not 0%, that thing can explode. Okay, those were the 3 big glitches in Michael Saylor's thought process to me. And now it's time for a quick trip down memory lane. Back to Wall Street in 2006, there was an investment bank which was making so much money on their new and innovative financial instrument. So much so that Fortune magazine named them America's most admired company in 2005, 2006 and 2007. I'll give you their name in a minute, but they started printing out so much money, maybe you could call it an infinite money glitch, because they figured out that you could securitize and issue a large amount of asset-backed securities, specifically in the real estate world, but you could really get a lot of money when you juiced those gains and introduced a lot of leverage. Like a lot. You can probably guess how this story ends, but before this bank went bust, its leverage ratio was 35-1. And remember, the same thought process applied back then. It was prevailing wisdom back then that real estate prices can only do one thing, go up. And it's a pretty safe assumption. They probably will over the long arch of history. I believe Bitcoin's price will go up over the long arch of history. But when you introduce a shit ton of leverage, irrational exuberance, and frankly, stupid financial engineering, that led to one of our greatest financial crashes of all time, the real estate crash of 2008. And of course, that bank was Bear Stearns. And when they failed, it kicked off the greatest financial disaster in modern times. If other tech companies hear MicroStrategy's siren song as they are pitching to them, the ramifications could be extreme. And if the derivative markets really take hold of this, same thing could happen. Now, I'm not saying that this will happen. The price of Bitcoin really could continue to go up. I believe it will in the long run. I believe it will be volatile. So we are on the same page. But the difference between me and Michael Saylor is that he is not acknowledging or appreciating the insane amount of risk that he is undertaking, and frankly recommending other people take. And I really think that this can hurt individual investors. I just made a video talking about how retail investors are getting more and more interested in options contracts because that's how brokerages are realizing they can juice money out of us. So if you want to check that out, it'll be on the end screen. If other companies start taking Bitcoin as their main treasury deposit and more people are using the derivative markets, I would like to be on paper calling this out very early in the game that we will see a great financial disaster. 800 years ago, St. Thomas Aquinas wrote, "Beware the man of one book." This rings true today. I believe that intelligent investing is the antidote to this. And I'm starting a company to do something about it. We've created the world's first purely Buffett-style social and data platform. And we created a course that shows you exactly how to research a stock like Warren Buffett, the undisputed greatest investor of all time. If this Bitcoin run-up is anything like the great financial crisis, you will want to know how to invest like Buffett. The man made billions during that time, and it really was his last big buying spree. If you want to learn more, there'll be a link to flankinvesting.com in the description below, as well as a link to our free Discord if you just want to join our community and see what we're all about. I really hope to see you there. Thanks again for watching, and we'll see you next time.